So get this, one piece of news from thousands of miles away and bam, the Indian stock market just goes into a total freefall. We're going to unpack what happened on this really dramatic day, a day that sent some serious shockwaves through the financial world. Okay, so this was the number that just flashed across everyone's screens, grabbing all the attention. Minus 733 points. I mean, that is a staggering drop for the Sensex, the benchmark for India's 30 biggest companies. This wasn't just a little dip, folks. This was a plunge.
And it wasn't just the Sensex feeling the pain. Oh no, the Nifty 50 index, that's the one tracking another 50 major stocks. It followed right behind, dropping a massive 236 points. That sent it to a 3-week low. It was just a brutal day all around, pretty much erasing all the recent gains, and you can bet, sparking a lot of concern.
So, okay, we've got a major market plunge on our hands. But a drop this steep, it doesn't just happen out of nowhere, right? So the big question is, why? What on earth triggered this sudden financial storm?
Well, the answer, and you might find this surprising, it actually lies thousands of miles away. The trigger wasn't something happening inside India. No domestic policy change, no local scandal. Nope, it was an announcement from across the globe, what we're calling the American tariff shock.
And here it is, the catalyst. The United States announced it was planning to slap a massive 100% tariff on branded and patented pharmaceutical drugs coming from India. Now, let's be clear, this wasn't some small tax bump. This was a policy move designed to have a huge, huge impact.
So, for anyone who's a bit fuzzy on what a tariff is, it's really simple. It's just a tax. A government puts this tax on stuff coming into the country, and that makes those imported goods more expensive for people to buy. In this case, a 100% tariff would literally double the cost of these Indian drugs in the US market, just overnight.
Okay, so you've got a policy that could double the price of Indian drugs in their single biggest market. You can imagine the reaction was, well, swift and severe. It sent shockwaves through two of India's most important export sectors. We're talking about pharma and IT stocks, and they just tumbled. This was a direct hit on the powerhouses of the Indian economy.
And boy, did we see the devastation in the pharma sector right away. Look at Wockhardt. It led the losses, cratering by over 9% in just one day. And you see it just says significant drop for giants like Biocon and Sun Pharma. Well, significant means millions in market value just, poof, vanished in hours. This wasn't just a market dip. It was a full-on assault on their entire business model, which, leans so heavily on those exports to the US.
And check this out. This really paints a picture of just how widespread the bad vibes were. On the left, you've got the major losers. And it's not just pharma, see? IT heavyweights like TCS and Infosys are right there with them, probably because any kind of trade dispute with the US just creates a ton of uncertainty for them too. And then look at the right, a very, very short list of companies that actually managed to gain. The real takeaway here, the fear was not contained. It spread everywhere.
Yeah. This negative feeling created what traders like to call a sea of red. The damage went way beyond just those big headline stocks we just looked at.
And here's where you can really see how deep the panic ran. It wasn't just the mega corporations taking the hit. The indices that track the smaller and medium-sized companies, they also fell, and fell sharply, by as much as 2%. That's a really key indicator that investors weren't just ditching specific stocks. They were basically running for the exits, getting out of the market altogether.
And this chart, wow, this donut chart really tells the story of the day, doesn't it? Just look at that massive purple slice. That's over 3,100 stocks that lost value. Compare that to the tiny blue slice of about 1,000 that went up. It really just boils down to this. For every one stock that gained, nearly 3 went down. That's what you call brutal market breath, and it just shows how incredibly pessimistic the entire market was feeling.
But, to really get the full picture of this panic, we need to zoom out a bit. This tariff news, it didn't just happen in a bubble. It landed in an already nervous global market, and that's a super crucial piece of this whole puzzle. This wasn't just an Indian story.
I mean, the fear was just contagious. The shockwaves from that US announcement, they rippled all across Asia. Markets in South Korea, Japan, they all fell sharply. Even the US markets themselves were down. Honestly, Europe was pretty much the only bright spot, but the big global trend was obvious. Investors were scared.
And this right here is maybe the clearest signal of that global fear. Nearly 5,000 crores. Just let that sink in. That is how much foreign investors pulled out of the Indian market in a single day.
When that much international money flees that fast, it sends a really powerful message of no confidence.
So what's the big takeaway from all this? We saw how one single policy announcement from halfway across the planet could trigger a massive domestic market crash. And it was all amplified by this wider global anxiety. It really all comes back to a crucial question for our times, doesn't it? In a world this connected, how insulated can any single market truly be?